The
following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour on the second day of November. That means that the October candle's done, and we're really now headed right into the new month. Let me just check something here because I don't believe it happened. I just need to look at. We'll go straight to send this report, error, easy language, isolated services, encountered a problem. We're sorry for the inconvenience. Oh, yeah, big inconvenience, that's for sure. Wow, I don't want that to happen. I've had it already happen in the chart of my futures where I notate everything. I noted it. Oh, I had everything done so perfectly for today, showing the arcs and the cups, and all of a sudden it's just a big squash. All the letters are just clumped together. 32,548 in the Dow, down 105. We are probably going to make a leg D today if there's no new high above yesterday's high. What was it, 32,998 or something like that? I think the 32,900s could be resistance. If there's no new high today, then, yep, 32,975. So if the 32,900s becomes resistance today, that's going to be an issue, at least for a couple of days. So what we're looking at here is the Dow had the most, can you believe, 28,660 on the 13th of October. This is like 2.5 weeks later, 3 weeks later. We're into the first week of November. Look at this chart right here. You've got, I have a rule. I call it the 1-3-6 rule. That is the best case in a bull or a bear phase is to have one bar rest. Doesn't matter whether it's a 1 minute chart or a monthly chart, but one bar rest and then go on to the next higher high or lower low. And 3 bars is still fine. It's not as powerful. But when it gets to 6 bars, it means that you kind of have to restart the trigger of the momentum to that directional move that you were in over again. But actually, if you do, that's usually good for at least another 2 peaks higher. So what we're looking at here, since the low of the 13th of October, 28,660, this is a move. This is an incredible move because we've only had peak A with 1 bar rest. Leg B goes to peak B, 1 bar rest. Leg C goes to peak C way up in the 32,000s for a doji candle, 1 bar. We had a weak session yesterday, and I expected that to be a further bit of weakness, at least intraday today. We're getting that. So at peak D, surely you'd get at least 3 days of consolidation. If there is a new high today or tomorrow, that would be extraordinary action. Over 4,000 points off a low. I mean, that's a rocket ship. We hardly ever get that. And look what happened. You've got your left side, right side price time match. It has until tomorrow. There's a little flexibility here because I couldn't get the exact low I used to. The plumb line I used was the low of right there, 28,715 on the, I think it was the first day of October, right? Yeah. And so that takes you to tomorrow, the next day, to get to the 33,364 level. At this particular point, I think that's going to be kind of tough to do. So therefore, I'm thinking pattern that I'm expecting would now be, let's just draw it in and see what happens using Chapman wave methodology. Here we get at least a 3-day consolidation going into the election next week. And then we come out of the election and either the market says, okay, ready for another big move to the upside, or it says, maybe this is going to create a little bit too much chaos, and I'm going to go down even more, 6 bars before I try to get back to the high that was made in the 30,990s. All right, that's my scenario right now. And the reason why I've also done it is look at the spectacular move a single leg A. It's still a single leg A because it's a weekly chart. I have to wait for Friday's close to see where it closes, and then you have to wait all of next week to see if there's a lower low than the high of this week. So this is Chapman Wave inside track repellent zone that's just been absolutely remarkable. Look at the symmetry. I know Larry talks about this 135. It's a different 135. It's the move of highs and lows with a matching time sequence that says there's been a thrust to the upside, and on this third time it's matching so well, or on the fourth time it's matching so well, there should be some kind of reversal, whether it's to the upside or the downside. Let me show you something here. Here's the YM, and the YM says, gee, maybe we could go just a little longer before we actually break out. I'll make this the weekly chart, the one in the middle right here. Look at this. So you've got the time sequence from the peak E, that high that was made the first week of January in the Dow futures contract. This is a continuous contract, pulls back sharply, makes two lower lows, and that sets in place the Chapman Wave inside track propellant zone, which has been magnificent. And then you get the resistance level over here. I'm going to move this up just a tad because it has nothing to do with the trend line. Such a sensitive mouse is this, going all over the show. There you are. I move this up a little bit there. And that's all I'm showing here is that within the context of the highs, this one was a little bit longer. Look, here we went that move from the January high to the April high, April the 22nd, is now, it was a week, it was 2 weeks late. And now, if I do this, just using the time sequence of that very first series of highs, I'm going to put new parallel. Let's change the color. Let's just make this gray for the moment. I've got too many lines here. Let's make it blue. So you see this line, if I go to the exact high, it takes us to about the week of the 18th. So we've got a couple of weeks to go. Otherwise, it's just a pure match, and it would go down to January, the first week of January. But what it's saying is we're getting into this area of resistance. And let me just get this out of the way here. And this green line is where it breaks out, which it hasn't done yet. It's gone above it, but it hasn't closed above it. And remember, we had exactly the same thing with the VIX. That's the reason why I've been so bullish and expecting, certainly on the Dow as the leader. Let me show you this Chapman Wave inside track repellent zone. We're right in it at this moment. Look at the VIX index. We went to it. Now we're in the propellant zone. So is this where we start to see the VIX rally a little bit? We don't know. The technicals, how did that change? Wow. Well, I feel like Larry right now. It's when you beholden to technology, that technology through either our ignorance. Why are those so high? Oh my goodness, I don't know what happened here. All right, let's just move that up. All right, I'll be back in a moment. I've got a little figuring out to do with my software. I'll be right back. Dow is down 98, S&P's down 20. Basil, Chapman, target finishes out. We've got a lot to cover. I'm done with this first part. We'll come back and we'll do all the rest.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, I thought I'd just show this in the den. I mentioned Duffy's had on semiconductor, and I thought I'd just show this chart. The question, of course, from always is, in those techniques that you've developed over the decades, how consistent are they? Well, look at this. On semiconductor, in the daily chart, has a Chapman wave inside track repellent zone. It went right to it for the fourth time actually, in the daily chart since it made its high up in the 75s at a peak G around about the 23rd or so of August. And it's already plunged down to the 54 level, spikes up to about 67, and now it's trading at 61.97. And you can see how it got repelled there. But wait a minute, it's even longer when you go to the weekly chart. They made this peak F/A because I wasn't sure what it was. It had a look of an F, but it was also a single leg to the upside. And that was the week of the 26th of August at 76.78. Oh, that was that one over there. So look at this. It's gone there. It's been repelled from the inside track, and it's a peak D in the monthly chart. So this is something to take into consideration. I wanted to show you, there are many others, and also I wanted to show you how many leg Ds and maybe possibly even a peak D there are at this particular point in the daily chart. Another reason for me to say, hey, be a little careful here. We've kind of, the buy signal to buy mode in the daily charts have kind of fulfilled the obligation to get you to at least a D. Look at this. Peak D in the SLX, the Van Eck Vector Steel ETF, goes right to the 200-period moving average around about the 25th, 6th of October, goes to a leg D, makes a peak D, and then reverses, and now it's got that repellent line at 54.82, still holding pretty well technically, but it is bumping into resistance. And look at the longer-term weekly chart resistance. It comes down, breaks out for 3 weeks, and now it's testing the trend line that it broke out of. So these are very important. Look at the S&P, SPX.X. There we go. S&P makes a peak D, and then in one bar later, it makes a peak D. Remember, 136 is my consolidation bars, number of bars that I look at. Well, it did a 1, 2, 3 3-bar consolidation from around about the 17th of October. I'll give you the exact date. The 18th of October, it pulls back for 3 days, and only on the 24th does it break out. And that's still very positive. Then it has 1 bar at peak C, goes to a D, 1 bar at D goes to an E, just a fractional high. And my rule of thumb is, in the Chapman methodology, the quicker you go CDE or BCD, the greater the chance that you're going to pull back. Not a major sell signal, but there's a greater chance that you're going to have some kind of a pullback and use up a couple of bars to consolidate. That's what we've seen. Look at the SMHs. I'm actually impressed that the SMHs on semiconductor was in that field. So 192.25 up $1.74 today. How's Advanced Micro Devices doing? It made a leg D. All right, what's your obligation? I drew the rectangle in. I said this is probably the range for Advanced Micro Devices. It goes to 63.93. What is 63.93? 63 happens to... Okay, let me go. In Advanced Micro Devices, one day is trading on the 6th of October with a 70.29 high. And the next day, gaps down, and the high is 64.03. So 64.03, today's high is 63.93. We just missed getting above that. So in the gap down methodology that I have, this has got a lot of work to start to trade above the bar that started the gap down, and that makes the high of the 6th of 70.29, an area that Advanced Micro Devices, until it starts trading in the 70 to 72 area, the downtrend in the weekly charts, especially the monthly, isn't even close to turning up. Okay, with that, now, I said I'd do a couple of things. I just wanted to show you gold is pulling back from the intraday high of 1662. Look how often it has the wick of the candle and then pulls back. It just doesn't have the power to close at the high in a green candle and then follow it up the next day with a nice long wick and a good green candle. Until it does that, it's just kind of stuck. And this is what I've been saying for about 9-10 months now. Actually, it's even more. Try to think of the gold-dollar relationship separately. Go to each one and do the analysis, because if the dollar screams to multi-year, decade highs, and gold is not going to decade lows, then obviously there's a disparity. If the volatility index is still, even now, that has pulled back right to... Did I talk about the 200-period moving average being the thing that I'm watching to see as support for the VIX index? I think I did last week. Well, it went to the 26 area. It went to a trough C on the 28th. It made a low at 25.75 and a slightly higher high the next day. And then yesterday it made a lower low of 25.66. And here it is. And it's saying it legged D to the downside. I'm kind of ready for a little bit of a bounce, which says, okay, just be careful here, because all of these indices have had spectacular moves to the upside. The ones that have had good moves have been not just good, but spectacular. And then there are a lot of laggards. And the laggards are saying, look at the QQQ. Oops, type it in here. The QQQ went to that peak C almost apologetically, and now it's still stuck. It's making a dreaded H pattern. It's down $1.50. This is the Invesco QQ Trust series. So what I've been discussing for ever since November of last year, a year ago, I started saying, I'm very nervous about the QQQs. I think that there's going to be a sharp sell-off, and that the money that's gone into the QQQs could come out of that for quite some time. How does it go into any other area? Does it go into any other area? And that was the big question. Well, I think that now what we're looking at is stocks like, let's go to, say, NVIDIA, which has had a very nice bounce off the 106 or 7 low. It's trading at 138 in leg E right now. But look at that weekly chart. Look at the monthly chart. It tells me that rallies in these big caps, even, I'm not going to put Apple in the same category. It's a different category altogether. But certainly the Netflix And the other FANG stocks, look at Netflix, A, B, C, D. This is in a D. And the obligation of the Chapman wave is to get you from a buy signal to a buy mode, and at least 4 higher peaks. That's peak A, peak B, peak C. So this is A, that's B, right there, B, and here's C. And it's stalling at the where? 200 period exponential moving average, leg C in the monthly chart. But I suspect that money will come out from these guys and go into, look at Caterpillar. Oh, I wrote Caterpillar in the wrong place. Look at Caterpillar right here. CAT. So there was something in the den. We had a question about, just a statement. Rochelle says SMCI all-time highs. So Caterpillar doji candle peak F. If there's no new high, another doji candle so far today. It's over it's over a lot of resistance, even the Chapman wave inside track, and we'll see what happens. But this is very select, this particular movement. Let me just have a look as we go to the break. SMCI, and there it is. Super microcomputer. Wow, what a big move.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So we're looking at, I'm just doing this real quickly. Efficiency, I just spelled it wrong. Let's see, systems. Yeah, so super microcomputer Inc., high performance efficiency systems. Yeah, this is a spectacular move, all-time high, absolutely. Leg B in the daily chart. Woo, huge move today, up 16%, up 11%. And everyone's talking about how bad this, the computer business is, et cetera, et cetera. Let's see, Dell. Look, Dell's had a huge move down from the 60s to the 30s. It's trading at 38 right now. Not much to see here. So this is what I'm saying, that you've got to be so selective in your moves, in your choices at this particular point, because within the sector, you can have one stock that's doing fantastically. Look at this, Rambus, also in the same kind of, well, this is more semis, but Rambus Inc. Hasn't quite made a new all-time high, but it's got this left side, right side price time match in the in the monthly chart. Leg D, another D in a huge move, overlapping wave, goes to leg D at 33.44, up 61 cents today. And what is the weekly chart? Weekly chart, oh, I drew this in. Left side, right side price time match to the left side high of March, I think it was, late March. Yeah, the 1st of April. 1st of April, 33.75, and today's high is 33.66. Within pennies, but it's only a leg C. And look at that. Beautiful move from the low. I'd done this. I think I used this as an example in the Chapman wave methodology. The low that was made in Rambus the week of the 8th of July at 20, round number low, 20. Come on. Why didn't you type that in, mister? 20, I love round numbers, especially at potential highs or lows. Low. Back in July, went to a peak A in the 28 area. But then what happened is it pulled back, and then it made a peak A, and then A made a lower low in the bar, the following bar. So the question normally would be, isn't that an A minus, and then you get a new move? No. This is your, and I circled this to say, that's your starting point. Your obligation in Chapman wave is to count each higher peak or lower trough. So that A is legitimate. That's a legitimate A. And this B, which is just pennies underneath that A, is a gray B because it's underneath. Both that's a gray A and a gray B. And then all of a sudden, the overlapping wave says that this leg up not only takes out that B, but takes out that previous A, but the B is what's important, and that becomes a C. So we're in leg C. That means that Rambus is going even higher. That means that any sharp pullbacks can be bought with the anticipation in 2022, this year, that there should be higher highs to come. And that's a peak F in the monthly chart, and I'll have to count it either as a G/B if it does it now, or if it pulls back before that, and then goes to a higher high, that'll be a new C, and then I'll have to put G/C, because the 9 is still active, way positive above the 14-period moving average, even though all the other technicals pull back. All right. So did I hear something going on there? No, I didn't. And the question came in, would I look at... oh, yes. So the question came in, you had spoken about something that one of your stocks that had earnings coming up. Why? How did you deal with that? That's a good question. So this is what I did. We went long. We wanted. Actually, I'm going to go through this very slowly because it pertains to a lot of you now. What do you do when things get away from you? How do you deal with that? Let me just check. I'm still getting sound. I am. Okay. So we bought Genworth Financial. I had drawn this in as a chart formation that looked to me like that long from July, or no, was it about maybe January? Yes, January January of 2019 at 502. It started a whole series of lower highs that made a beautiful Chapman wave inside track repellent zone. So I looked at this, and the MACD was good, stochastic was okay, but the 9-period moving average refused to go pink. It continued to stay green. And that said to me that within the context of what I'm looking at here, and we were in this arch formation that said that's a dreaded H, but 343 was the low back in, 343 was back in right there. The week of the 24th of June, And then it came back and successfully tested it because it only went to 344, a penny higher. So that was a dreaded H, and that means that all the lettering was still valid. So it goes to a peak A and a peak B, pulls back huge in the arch formation, but with the technicals still pretty much very good except for the unbalanced volume. And then it started a rally to the upside. So we bought it on the 19th of October. I said, let's buy two positions, a split position. The first one, and why did I do that? So the 19th of October is right here. Actually, it's a little bit of a lesson, and let's just do that as a lesson. Here we are on leg C. It's at 447, and I love the way that it broke out of the longer-term daily resistance, all right, here. And the MACD strong, stochastics flat at, in the 90% or 86% area. On-balance volume was still rallying. And I said, you know, I like this. Genworth Financial, long-term care, mortgage insurance. This is the area that might survive because they can add it on much easier in terms of inflation. So I liked it. So I said to buy a split position. And one would be under 433, I think it was. So we got it at 432. But what did I do? I said, I don't want to miss like we have on some of the other positions where I should have bought it right there at the open, no matter whether it was higher or lower, because it was so powerful. In this case, I said, I don't want to miss the opportunity, so we'll split a position. We'll get, instead of just a small position, we'll split a position, buy it if there's a dip, and if there's a dip deeper than that, then we'll add the second position. We never got the second position. We got the first and it acted so well. I said, okay, we'll skip the second position. And it went from 432. And then I kept saying, earnings are on Tuesday. Let's be careful. So we took two little bits of little tads off. And then I said, let's see if we can survive today. And I raised the stop. And I said, if it goes to $4.82, I think it was, today, let's take another tad off, be fabulous action. And here it is. Earnings came out yesterday. It was a little bit under. I didn't see the stock doing anything much. The 9 o'clock was the conference call. I never listen to conference calls. I just want to see the result. And the result was that it popped up today. It's now 4%. Up 19 cents at $4.89. Now, I had some other stocks in the insurance area that I like very much. And I said, why would I want to pay $44 or $144 for an 8 no or maybe in the similar but not quite the same area or something like that when I can be paying very little money? Because I'm still trying to keep a big cash position so that we can keep getting into positions. I'd rather be aggressively long like we are 3 times long in the Dow position after having gone 1 times 1 long at almost off the lows. Now we've got an aggressive position. So I'm trying to retain the money. But if this particular sector, the insurance sector, is going to do well, I'd rather buy a low-price stock and get a nice big bag for the money, but still within the portfolio. It's a small part of the portfolio, and that's what we've done. So it's now, today is at 492. That's a very, very nice one. I'll be back. Basil, Chapman, Tiger Conditions out. Dow's down 137.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, so I lost. It's happened over the years periodically. All of a sudden, the notations of my letters, because they're not done automatically, I do it by hand, suddenly get squashed together. It happened yesterday or day before, and I managed to change the symbol and then go back to what it was. This is the ESZ22, and all the letters went right back to where they were supposed to be. Right now, they're in a cluster formation. So what I thought I'd do is just quickly I'd show you the gold chart, the low that was made at 1810, at 610 last night on the 1st. Let's just do this. We put in an up arrow, and then I will just do the notation, but I can't. Let's see. So this is uppercase. A, uppercase on the way. A, B, just counting the higher peaks. C, obligation is to get you to at least a D. You can go on to E, F, and even G. We could recycle, do a bunch of things. So here we go, E, F, G, and then it has a sharp pullback. All right, down arrow, and now it goes very strong leg A and B, then it stalls, holds steady, and you start again because it's low down, whatever. This is your starting bar. So this becomes A. That becomes gray A, gray B, because it's underneath the previous ones. This becomes gray A and gray B again, because it's underneath the previous peak B high. Now all of a sudden you get your C, and you get your C right here. And the obligation is to get you to a D. Well, it gets you to the D. Oh, man, the mouse is just too quick for me. So there we go. There we go, C, D, and then what does it do? It stalls. This is a gray A because it's underneath the other one, but we're calling this A, and that's a new high, so it's E/B because you're in line with the others. So A and then E/, if I can get the mouse to work, there we go. E, brand new E. But you might have had, because the 9 is still way above the 40, even though the MACD is starting to slip and the stochastic, you've still got the benefit of that 14, and then it goes F. And that could be an F or a C1, C2, and then you get your turn down in gold. Now, normally what I would do is I would do a left side, right side price time match to the conglomeration here at the bottom and say, okay, this is where I want to see support hold. I'm going to draw this in as a left side, right side price time match right here. Green going up, pink going down. So this one is legitimate. I don't have to change the color right there. Don't even know where it is right now, but I'm going to put it in there, green. So this is your arch formation that has a left side, right side price time match, bar symmetry. And look what happened. 3 bars before it takes out that left, or it's 4 bars before it takes out that left side low, the support level. And now I have to say, okay, now I can go down all the way to that low. Where would I draw the symmetry? Well, I might have to find a different plumb line, but I can keep it the same, but I want to be as conservative as possible. So I'll make it from here to there. I've chosen a particular candle, always either a high or a low or a candle, and I'm putting this in, and now I'm putting it in over here. And that says within the next couple of bars, watch out, because gold could pull back to the low that was made 10:20 last night, 10:10 to 10:20 Eastern time last night in the 1650 area. All right, and we're at 1652. So I like to do that. As I just thought I'd show you, I can't show you the ESZ right now because for some reason, I don't even know how I'm going to fix it other than to get rid of all the letters and do it all over again. But look at the beautiful symmetry that we had. Oh, I wish I had this first one because I had drawn it in and part trading, part doing it theoretically way back this morning. Look at this cluster. You see all the letters just squashed together. But, it was so nice. I even lost that rectangle there. Now, I can't do it. Look, here's your peak A, peak B, peak C, peak D, and then a quick E. I mean, this is, what can I say? It's very upsetting. I don't know what I'll do this afternoon after the show. I'll have to start fixing all the stuff. So Sava was mentioned in the den. Yep, the dreaded H. Got to be a little careful, but that 200-period moving average of 34.06 is trading at 33.38 right now. That at this point still has to be a magnet. To get away from it, you need to see 38.75, something like that, to say, I'm done on the downside, now I'm going up. But if it goes down, it says the whole area of 34 is now your resistance area. Another question came in. Where did it go? NEO, this is a Chinese EV company. NEO, Chinese company, electric car vehicle, 66.98 back in around about January or so of this year. 66.99 was the high. Peak C then fails, and it comes all the way down, almost like an Eiffel Tower. A leg E to the downside now, trading at 9.67. I see nothing in some of these EV stocks because this is not the time. Maybe a little later in the month, but right now, no. Rambus, what happened? What was the question? Rambus, another one of the companies with no earnings. Investing is earnings. No. You're absolutely wrong about that. Investing is price movement. That's all it is. If you have something that's moving in price, it could be a hated stock, it could be a love stock, it could be a high PE stock, it could be a low PE stock. If it's moving up, it means that it's being bought. If it's moving down, it means it's being sold. Don't get stuck in that methodology of looking at earnings. Look, you talk earnings, you can look at so many companies. You could look at Shopify. In some way, they've had earnings. It's their debt. It's all the other things that were hurting them. They did have some earnings. Shopify goes from 176. It was actually 3,000 something back in November of 2021 before it got split, and it drops down to 23.63. No, you've got to look at the price movement. I mean, I know you've mentioned before GE is a real company. They have its earnings, etc. Well, real earnings. I mean, why did the stock go down to the sixes or something before it had this 200 or 300 or 900 or whatever it is split to the upside? Yeah, now it's starting to show a little bit better pattern. Now actually I'm much more interested in GE, but only because of the patterns in aircraft engines and other areas. All right. Of course, they bought to downtown Boston, right at the peak. They built this building right on the seafront, on the sea, right in the harbor, and I think now they're getting out of it. Bought it at the top, selling it at the bottom. Well, I don't know if it's the bottom. So yeah, you got to be careful. All right. Other thing that I was looking at here is question came in. Could I look? Yeah. Where was it? Where's it? EQT. EQT. This is one we followed periodically. This is EQT, natural gas and hydro. Oh, I haven't even finished those things I got to do before the end of the day. Yeah, this is just stuck. It's at 40.70. I'm sure it will have another big rally at some point. Right now, it's just kind of stuck between 42 and 37. If it starts to trade at 46.50, that's really good. Let's look at natural gas today. Natural gas has a green candle. Good. I'm watching natural gas close because I think it's getting real close to some kind of a balance. We'll have to follow it.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
I wanted to spend a moment on the natural gas, just to show you. There's a cluster formation. The doji candle of 3 days ago, and then the gap down, is suggesting that there's some uncertainty here in the price action, that is. So within that context, as I said about a week ago, I'd rather be buying. Maybe you could just nibble on it right here to get your foot in the door, because when it moves, it has a big gap either up or down. Most of them have been down for a while. Now I think we might be reversing because the MACD is good, stochastics improving, not great. On balance, volume is terrible, and the 9 is still way under the 14. It's going to take a move into the 22s and holding to get the 9 period to cross positive. So this is all I'm saying, is that At this stage, natural gas should be, with winter coming in and all that, there are other things going on for the price to be pressured to the downside. But if there is a relief rally, it could be very quick, very sharp, and it could be a gap up that gaps up, a 3-day gap. In other words, gap up once and then the following gap up, and then we'll see what happens. So yes, if you're interested in the natural gas, using maybe UNG, the United States Oil and Natural Gas Fund, I'd say, yeah, put your foot in the door right now. 1982, I'd say probably $1 at this particular point, $1 stop or $1.30. So you got almost a 10% on a small position, because you want to add to it if it does start to move to the upside. So I'm saying it's probably getting ready. I did gas, oil stuck in that range, is starting to try to move out of the resistance area. So going to the rest of the day, I'm anticipating the market sort of comes back and then just holds quietly. Going into the Fed speak, it's what happens afterwards. I'm not going to guess what happens afterwards. What I am saying is, if there is about an 80 or a 90-point move higher in the Dow after 230 and the VIX index is actually pulling back, that'll be a sign that we could close higher. And if there is a move to maybe even just 40 to 60 points down at 230, it says, yeah, just hold on. We're still having a period of rest. But the technicals on all these charts, the Dow and the S&P